Welcome to this edition of Supply Chain Spotlight. I'm JT Engstrom with FreightWaves. Here with me is a special guest, Jim Blaeser, director at AlixPartners. Today we're going to be talking about disruption in the supply chain. Jim, it's good to see you. Thank you for joining us.
Yeah, thanks for having us, JT. Appreciate it so much.
And where are you taking this call from today?
I'm in my home office in New York.
Okay. Has there been much traveling in your world, in your arena over the past sort of year or so?
So for the last year, I've largely been working from here. We have, some travel restrictions like most other firms. We do have some team members traveling for specific jobs that require sort of shop floor manufacturing and the like, but most of us have been working from home.
Okay. And I ask because I know you, like myself, in previous uh, worlds, if you will, have been road warriors. So it's always interesting to see how those standard practices evolve. And I myself have spent a lot less time on the road than I had previously. And so it's great that we're both able to be productive remotely.
Yeah, I mean, there's definitely some puts and takes related to it, right? I mean, I get probably 20% of my week back for not leaving, but you also sort of lack some of the face-to-face connections that you make. So I think that the best is to come in terms of a hybrid approach going forward, and we're looking forward to that.
No, I think that's right. I think that's right. And so within that context, let's talk a little bit about what the last year had brought to the space, both in the first, middle, and last mile. And obviously 2020 was a very unique year, and the puts and takes across all of those, three market segments have been unique. Can you talk to us a little bit about what you'd seen from being on the front lines in the market?
Yeah, it's interesting that the front lines happen in my house now, right? The last year or two, so within AlixPartners, I focus mainly on transportation, logistics, infrastructure. I do that, also within the lens of our operations community, a focus on shipper side logistics, manufacturers, retailers, wholesalers. But in the last 2 years, we were talking about before, really focused on working with 3PLs, trucking companies, ports, carriers of different sizes, shapes, and it's been a good run for our transportation infrastructure practice. What I think is interesting is spending 2020 across those segments, got a good real view around some of the disruption, and obviously a buzzword that we're capturing here. But I think certainly if there ever was a year that it was true, it was 2020. Um, and and I think we set out here to talk about first mile, last mile, and sort of everything in between. So a pretty ambitious scope. But I've been fortunate in the last year, as I say, to sort of see some unique situations around first mile. If you want to start there and sort of go through our look back, right? Um, Prior to COVID, prior to the pandemic, uh, all eyes were on labor availability, labor cost. But more than anything, it was sort of, can I get people in my plant or in my DC to do this work that needs to be done? And I think there were a lot of programs that we were running, and a lot of our clients were thinking about that through the lens of, I can make everything I sell. How do I make more? What do I do in terms of strategies to get more people in the warehouse or in the plant when I need them, and not necessarily have them when I don't, right? And so, come COVID, I think the game changed a bit in terms of what we were optimizing for. We were just trying to figure out how to keep the plant in DC running, how to keep it staffed, how to be safe, how to keep people at distance in environments where they typically weren't designed to be at distance. So some unique challenges. How to do work remotely in an environment that is very uniquely sort of in the present, on the floor, so to speak, sort of environment, was really challenging. And so we saw the criteria change a bit from how do I get more people to how do I get people, period, keep them safe, get them there. I think that there was obviously a lot of disruption in that area, and it manifests itself in terms of supply continuity, right? I mean, we saw at the outset of the pandemic, the Chinese factory shut down for weeks, and we thought, well, that was dramatic, and then it landed on our shores, and we had all sorts of issues in terms of plants remaining open, avoiding outbreaks. Those that did, how do we manage them and mitigate them? And we've seen, all sorts of supply shocks throughout the network, whether it's related to things that are just closer to the pandemic, like PPE, or just raw materials. Thinking about, building materials and lumber. I mean, there's just so many products that, at the base level that create freight demand, that have been so volatile and disrupted, for lack of a better term, in the last year, right? So I think it was, certainly a wild year, and that's not news to anybody. But I think we had a unique opportunity to work with companies in terms of helping them sort of reestablish a new normal of how they're operating and maintaining their supply output or distribution output. And I see some interesting things when we look next year. So we'll save that for the look forward portion of this stuff.
Absolutely, and I think that's a great backdrop to what has materialized over the past 12 months. I want to say the last time we saw each other face to face, and obviously we've spoken virtually and over the phone between now and then, but I think the last time we saw each other face to face was last February in Miami, and that was just before the big materialization of the pandemic. And interestingly, we had dinner on the back lawn at a conference down there, and the day after, I gave a speech to a cohort of executives at an M&A conference, and gave a breakdown of the news we were hearing from Asia, plus some of the real-time data feeds we were seeing in international shipping, which were showing container vessel shipments down 40, 50, 60% year over year. And a component of the discussion I was giving was, it's not really clear what this will materialize into, but it's very clear if just looking through transportation data that something really is coming to our shores. And there were some of the executives I surveyed at that time, many recognized that volumes may or may not be down, but they hadn't seen it domestically yet. There wasn't necessarily a large preparation effort at the time. Again, this is mid-February, and we all sort of left that conference optimistic about what 2020 would look like. And lo and behold, within a month of that speech, there was some material bullwhip effects going through the supply chain at a pretty rapid velocity. And so when you think about the impacts of that across all elements, it's a very significant event. And it's interesting to hear you bring up labor across a lot of the different subsegments in transportation. You mentioned DCs and warehousing. The other contrast of the labor segmentation when you talk about in a pandemic event relates to driver supply, right? Because you think DCs and warehousing, you have a lot of people in a confined four-wall areas. In contrast, your drivers are by themselves in the cab, right? And so, from within your 14-hour HOS window, perhaps less interpersonal interaction, but it also meant that driver schools were shut down for a significant period of time. And so that capacity on the road was also pretty volatile, we'll say. Short haul and some DC mixes served okay. The long haul market was pretty challenged, which was also stacked on top of federal stimulus checks going to a lot of drivers, which gave them a trade-off decision as to whether or not it would be a good time to take a vacation. So I think starting with labor is a great way to talk about it, given the nature of the event.
Yeah, and you mentioned the bullwhip effect, and it's a great segue to the next topic I wanted to touch on. Ocean freight. And just I failed to mention at the outset. I feel like this is sort of a homecoming.
Just a shout out.
Prior to joining AlixPartners, I used to publish American Shipper, which is now part of FreightWaves. So
that's right. We know very well.
This is one of probably 100 or so webcasts. You guys have obviously grown a lot. Come a long way since 2012 when I was there. But
so we'll put you on the alumni roster, the formal alumni roster.
Yeah, well, we can talk about this later. I took an alumni picture at the last FreightWaves conference. But yeah, so ocean freight, which was really the sort of crux of American Shipper, and something I focused a lot of my career on. You really suffered from the bullwhip effect that you just mentioned, right? I mean, you have all this disruption in terms of freight generation and freight demand earlier in the year, and all the dislocation of vessels due to COVID issues, due to just the ocean carriers scrambling to sort of curtail supply and reining costs. And then this massive sort of demand surge at the end of the year as people are starting to want to get back to normalcy or take their dollars as a consumer, and instead of going on vacation, they're redoing a patio or buying new furniture or whatever the case is. And so what we saw in the back half of the year, just to be maybe more current, was a massive dislocation of ocean shipping capacity and demand that's culminated into a very sort of timely and in the now moment around port congestion, sky high rates, real sort of disruption in the ocean supply chain. What I would call sort of the middle mile, to pair up with your example of the trucking space. So really, all things are related, right? There's a butterfly effect here, or I guess you used it more more scientifically the bullwhip effect, which I think is a bit more accurate.
And you bring up, you mentioned another big element of the middle mile, the mix shifting effect as a result of the events that matriculated over the past year. You talked about people purchasing uh, either new goods for their homes, whether it's a bigger couch or a more comfortable chair, or purchasing a pool or buying new golf clubs because they wanted to have outdoor activities, or outright purchasing a new home. Um, and a lot of that parlayed into what we saw as a significant mix shift to higher goods in relation to goods plus services of overall spending. And so, from a transportation point of view, those goods are typically bigger and bulkier, right? They require more capacity, they're heavier. And that economically actually played out pretty well for the domestic surface transportation space. It'll be interesting to see in 2021 how that mix, whether it reverts back to the mean, whether it weighted average shifts services a little bit higher than goods this year as it in relation to overall historical averages, and what that means for overall surface transportation capacity demand.
Yeah, and that's even better segue than the last one into the next thing I want to talk about in the last mile. Is the sort of uh, introduction or some broadening of the category base of goods that are home delivered. Right. I mean, we've been tracking the big and bulky space for years, and it's interesting. I did a teleconference with your friends and mine at Stiefel earlier last year on the big and bulky space, and we compared notes over all the odd objects that everybody bought at the beginning of the quarantine. How many people went out and bought? They bought a trampoline, right? How many people, a new piano or a hot tub, or there's obviously large items that are sort of being bought with a greater frequency, and consumers were looking for them to be delivered, installed, and managed to the extent it was possible given COVID restrictions and people being in your home. Obviously, a little bit different wrinkle. But one thing that I thought was interesting that we also saw in the last mile was, consumers that were really focused on speed and cost were now focused on availability and capacity, right? I don't know if you had the phenomenon of spending any sort of late nights trying to book a Peapod reservation, but I know my parents did. For those of you listening at home, the Peapod reservations become available at 1 a.m. And so if you want to get on the list, you got to be there with your shopping cart ready to click at 101, right? And so, you saw a shift in terms of consumers needed to have product delivered. They probably never would have had delivered before. Those who really wouldn't have had grocery delivery needed to have it. Those who wouldn't have had, a big and bulky item delivered didn't have a choice. And we also saw a lot of interest in new areas like healthcare. The telemedicine really bringing about greater delivery of medical devices, medical products. Something I came to learn through the process was that just about every pharmacy in the country, if they didn't already offer home delivery, now does, be it a mom and pop or a local or your major chains. And so there's a huge entrance of new players into the last mile. I think one thing we saw last year, due to all of the concern over availability and the focus on getting your product, was an increase in cost of last mile delivery as the resources capacity became tight and demand increased. Something I want to talk about as we sort of look forward, right? What does that mean next year? Because I think that there's a lot to come in this space.
Yeah, yeah, and I think that's a phenomenal overview of what's materialized over the past 12 months or so. I was speaking with an executive at a large enterprise asset-based operation that also has asset-light operations, but backed by assets. And they had done a final mile purchase within the 6 months before COVID had occurred. And the financials of that operation, thanks to volume and rate, had really significantly improved over the COVID period because of all the demand. And then the pricing leverage they had and the increase in asset utilization, it was really tremendous. And I think that's true for a lot of final mile operators. And I think there's a really significant long-term secular trend where final mile operations, while they had been very attractive and desirable assets across the transportation space, have almost taken another step up above and beyond the desirability that had been seen before. And leading into those final mile networks, as we had talked about, as much volatility as had occurred in the medium to long haul trucking space, sometimes that variation, that volatility, can be good overall for the contract market, because at times it'll push the spot market through contract rates. right? And then you tie it all the way to the ports, as you mentioned, as you know oh so well. The changes in capacity on the ocean not only impact rates on the ocean, but also for air freight forwarding if entities are looking for alternative methodologies for shipping goods. And so it creates a really unique year, which sets us up for an interesting thought exercise for what the next year looks like, right?
Yeah, it's amazing to me that you think that how many people talked about 2020 being a dumpster fire and whatever else the terms were, but you just changing the calendar over doesn't change the reality of what the market we're in or the sort of the world we're in. So I think things are improving in a lot of regards, but there's a lot of work to do. One of the things when we want to track back over sort of our first mile, middle mile, last mile theme, if I may, just sort of looking forward to this year if that's where we're going. Um, I think this story this year on the first mile is going to be all about technology. There were some things I saw last year in just sort of client cases that we worked on either within logistics players or within the shippers and manufacturers, retailers, etc. Um, that I see a larger adoption of technology that allows us sort of get at the heart of the issue around labor. I've seen so much progress in the last few years, and so much sort of mindset shift around light technology, wearables, and cobotics, and other things that I think the term automation before often meant like we need to buy like a huge robot with a big arm to do this, that, or the other thing, and it's millions of dollars, and you buy it, and you're going to pay it back over years. I mean, the ROI cases on some of these light technologies that we're seeing in the warehouse and the plant are just so strong and so fast now. And a lot of these things, you look at like a logistics outfit, and you say, well, my contract for this warehouse is only a few years, and that's my horizon for ROI. Well, I mean, we can point to now technologies that, well, if that customer leaves and you close that warehouse, just put all this Google Glass in a box and send it to another warehouse, and the flexibility is there, and some of the impact, the use cases of some of this technology that we've seen in the field is just so powerful. So I'm really excited about technology this year in the automation space, DC automation, manufacturing automation, wearables, cobotics, two areas that we're really focusing on. I think have a lot of room to run here. I could go on, but I'm conscious of my time.
I agree, and I think thankfully, the surface, the transportation space is known for a long time that it was a laggard in technological adoption, and had made significant progress in adopting that technology. And over the past 5 to perhaps 10 years, but really the last 5, there's been a significant increase in technology investment, allocation of capital to really investing in that technology to not only talk about it, not only try to do it organically, but really double down on how much technology could be built and infiltrated into the industry over as short a period of time as possible. And I think those adoption trends will accelerate. And I think a lot of the technologies you've mentioned, in addition to some that you hadn't yet or we haven't talked about yet, will start coming to the forefront and having a material impact on efficiency, utilization, visibility, effective rating, a lot of different mechanisms across the space. And I think that's really exciting.
Yeah, no, agree. Can I look forward to the middle mile here? I know that we want to touch on all these, right?
Yep.
Okay. I don't want to take over the moderating here.
No, it's perfect.
um, the other thing that I think is really interesting and is really a here and now issue is the ocean freight market, right? I mean, how many calls do we get? Can you help us with very basic sort of freight forwarding and specific activities? Like, can you help us get freight out of the port? And that's not our business. We help where we can. We're a bit sort of bigger picture in that sense, but I think it's just sort of um, a sign of the times that the ocean freight market is really in a crisis in terms of port congestion, available containers, capacity levels, and I think as we sit back here and we're going to air this on March 4th, we'll be past Chinese New Year. I think the Chinese New Year is typically the reset time, and I'll tell you that if the ports can't catch up and the steamship lines can't rearrange their capacity and their vessels and get the containers back where they need in this reset period, this is going to be a long winter here, so to speak, in terms of how difficult this is going to be. But typically they do, right? Typically Chinese New Year, the 2 weeks off is a great reset time. So I'll be interested to see how this shakes out from the container shipping market. I feel like Punxsutawney Phil, like coming up, and am I going to see my shadow or not on, when this airs? We'll see if the Chinese New Year reset happens. Um,
And
but
this
but
will be
the,
the ultimate test for the reset of the Chinese New Year. And if we find ourselves really struggling to fully take advantage of that reset, it might have implications for what inventory stocking levels look like in terms of safety stock on a go forward basis.
Well, I saw a stat on another, back to our mutual friends on one of their market recaps with inventory to sales ratios are at historic lows. And, we saw this in 2010 when, after the financial crisis, inventory to sales ratios cratered to what was then the historic levels. And it really precipitated sort of a whipsaw ocean freight market where there was a massive restocking and the carriers were shorthanded. If there continues to be a restocking effort and the containers aren't put back where they need to be over Chinese New Year, we're in for more pain, and it's going to be a really painful ocean market for the year. But one thing I would say is it will right itself over time, right? In a macro sense, the container shipping market is very much set up to make sure that goods can get out of China or specifically or Asia more broadly, cost effectively and in a timely fashion. And it's not to the benefit of any of those countries and their economies and their supply chains for this market to function the way it is right now. So I have to believe that greater forces will intervene to create more container capacity, create more available capacity in whatever means it is. But it'll just take some time to work out. So again, back to Punxsutawney Phil. I don't know if there's 6 more weeks of winter or not, but there's definitely is a little bit more ahead of us. But there's a few things that I would look for in terms of reading the tea leaves into how long that this will prevail. But it's not a permanent reset in my mind.
No, absolutely. That's right. That's right. And so stepping forward, should we talk about look forward on final mile a little bit?
Yeah, I mean, final mile to me, I think that the challenge, we mentioned last year, was about sort of just surge in demand, right? Anybody, two guys in a truck, you got it, you're in business, right? And I think what you're going to see is a lot of um, there's a lot more pressure on the market to bring out the rate levels. I think that there's going to be, I guess say that again. I think there will be an easing of rate levels just based on reaching more of a steady state, right? A good understanding of how much capacity is out there, what the demand is for it. I wouldn't be surprised if we saw more consolidation in the space. It's a hugely fragmented market, right? When we talk about and we work with companies that do a lot of final mile delivery, they have networks to service a national last mile delivery network. You often need 100 plus local delivery agents to cover the country, and they range from multi-billion-dollar companies to Larry and Joe's moving company. So it's a really large, just sort of fragmented and very diverse market. I think it's been a subject of a tremendous amount of investor energy and discussion and conversation because sort of the growth trend and everything behind it is so compelling. But it's a hard market to make money in, and I think the last year has allowed last mile providers a sort of the door open for them to bring up rates and to really be more aggressive in that standpoint. But I think it'll even out in some way. I think there's also a really big impact that we're seeing across B2B supply chains. That's sort of the Amazon effect proliferating beyond the consumer, right? You you go to work and you bring your consumer expectation of service with you, and what was a 3, 4, 5 day delivery window on that part or whatever in the past now becomes a why isn't it here today or tomorrow sort of expectation. And so I think that there's going to be more interest and more of that proliferating. But like I said, I think uh, new entrants, consolidation, more Amazon activity, I think will lead to ultimately a bit more sort of rationalization of the rate levels.
No, I think that's right. I think that's right. And so, as you think through, the review of 2020, the look forward on 2021, as we encapsulate all of that in totality, if you were sitting in front of a group of executives encompassing both ocean, terrestrial surface, ground surface, and warehousing operators, what are the types of things you would be advising them to think about, and maybe some of the recommendations you'd be making?
So I'm doing all those things today. We have I have meetings throughout the day with people who sort of look a lot like what you just described. So I'll tell you what I am doing. My advice to carriers, 3PLs, is to maintain discipline, especially in markets like ocean freight, where discipline has always been the thorn in their side, right? The chasing market share for the sake of rates, or at the discount of rates, I should say. And I think this opportunity right now in the ocean side, um, it's clearly there's profit taking, and they need to sort of make themselves whole. There's been a lot of really bad years, and ocean freight sort of has always really been cheap, I think, in the sense, right? So I don't think that there's any shame necessarily in taking profits and sort of capitalizing on this. I do think that carriers and 3PLs should be smart about trying to identify the companies that they want to do business with in the long term, and making sure they do right by them through these issues. Because I do think that there's a longevity to that, and the business isn't that transactional that what you do today to sort of not necessarily help them out. I don't want to make it sound like there's a freebie out there, because there certainly isn't. We've asked, believe me. so, but I think it's about there's a relationship and account building opportunity and a stickiness opportunity out there for asset based providers. For shippers, I would caution anybody who's going into this year expecting to get a year over year decrease of their freight expenses to sort of maybe communicate something to the contrary to their management. And you'd really have to, eh, savings is always a function of where you're coming from, right? And in any market, there's someone who can find savings. It just means that they were really out of kilter before. So those things exist, right? But by and large, in the aggregate, I don't think this is a market where shippers are going to see really a lot of price reductions or cost deflation. In fact, I think it's quite the opposite. I think shippers really need to take a hard look at their carriers and understand who they're partnering with. And like I said, the inverse of what I just mentioned for carriers is sort of think about who you want to partner with, and be strategic about it, and look for some support from them, but also make sure that you don't forget it when this is over. I think the other thing shippers need to do, and you should do this all the time, it's just good hygiene, is look at the drivers of transportation. The best way to save money in transportation is to not ship, right? So if you can take two trailers and make it one trailer, you're going to save a lot more than if you beat up your carriers in any market. And so I think if you can look at load consolidation opportunities, network opportunities where you can reduce miles, all of those things, the drivers of transportation are going to help you sort of mitigate some of the cost of inflation through this environment. So there's just a few sort of thoughts around that. Investors, I think, is a wild one too. If you're an investor in this space right now, and obviously I think it really matters. It depends on what sort of segment you're in. But the multiples remain high. The market's pretty hot. We saw a lot of activity at the end of the last year, driven by founder-owned businesses looking to transact before the year. We still see a lot of activity in the market. So I think that it all depends always on where you bought in, and what your multiple is, right? But I think investors more broadly should keep an ear to the ground for good opportunities to either find something new or get out of what they're in. It's a good market probably to transact.
Yeah, I would agree. I would agree. That's a great overview. I think that would be very well received advice across a broad spectrum of the space. So I think
Thanks.
with that, Jim, I think we're gonna tie this one up. It was
Yeah.
great having you on. It's good to see you.
Yeah, I appreciate it. Thanks for having me. And it's always nice to come back home to FreightWaves, former American shipper. I enjoy it. You guys have obviously come a really long way in the last 8 years, and it's great to be a part of it. So thank you very much for
No, that's
inviting me.
right, and we'll keep going, and we'll look forward to having you and the team on again pretty
Yeah,
soon.
appreciate it.
Cool. So with that, thank you very much, Jim Blaeser, Director at AlixPartners. I'm JT Engstrom with FreightWaves. Thank you for your time.